Good morning, everyone. This is Marshall Giller bringing you the morning comment for April 3rd. Yesterday's jobless claims were better than expected. The news reports say we're the second lowest in 15 years. In fact, they're even better than that because 15 years ago, there were far fewer people in the U.S. If we adjust for such changes, the initial jobless claims were the lowest on record, the record going back to 1967. Nonetheless, the dollar weakened as traders braced themselves for a possible non-farm payroll figure of less than 200,000. Many investors see the risk on the downside owing to mean reversion after a string of exceptionally strong numbers. There could be a bigger than usual move in eurodollar on a disappointing number because European market participants, who are the usual sources of euro supply, will be out of the market for the Good Friday holiday. Remember how eurodollar jumped during Fed Chair Janet Yellen's press conference following the recent FOMC meeting, which took place after the European markets had closed for the day. However, I'd expect profit-taking and new short eurodollar positions to be established rather quickly, as many participants are likely to attribute any worse than expected result to the weather and assume that the April figures will resume showing an improvement. In any event, I'd expect that the market is positioned for a weak number, so the pain trade, the big shock to the market, would be a higher than expected figure. Oil was down sharply, particularly Brent, after Iran and the world powers agreed on the main outlines of an accord that includes a timetable for lifting sanctions. Iran could probably increase exports by over 1 million barrels a day if it were allowed to. Of course, the agreement is by no means a done deal. The two sides have until the end of June to work out the details, which probably won't be easy. Until then, no additional Iranian oil will flow into the market. If they do reach agreement then, though, the additional Iranian oil would arrive just as the increased flow from North Dakota floods into a market where storage is filled up. A disaster in waiting. The Canadian dollar and Norwegian krone were relatively unaffected, though, as both gained against the dollar. The NOK seems to be the currency that's tracking oil prices most closely recently. I'd expect it to weaken today as a result of the agreement. Today's highlights: there are no major events or releases scheduled during the European session. Along with the non-farm payrolls, the U.S. unemployment rate's forecast to remain unchanged at 5.5%, while the average hourly earnings are expected to accelerate a bit on a month-on-month basis. A robust labor report in line with estimates would keep the Fed on track to raise rates this year, which could boost confidence and strengthen the dollar. As for the speakers, Minneapolis Fed President Chillicothe and St. Louis Fed President Bullard both give introductory remarks at two separate conferences. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.